Good morning, traders. It's Kristen. Welcome back to my channel. Today is September 3rd in the morning, and this is a live feed in the market right here, what we have on screen. If you have been following my channel for a while, you would notice that usually I film this right here, this one screen, or sometimes just one chart and zooming it in. But today it's more elaborate. I'm showing you the two screens right here that I'm daily watching for my scalp or short-term trades. This is what I have here. We have about, usually I have 10 codes, and then these are my chart right here for my option or short-term trades. And then I have a different two screens, which is for swing trade, portfolio management, and those are in different screen. But, for short term, I'm more focused on here because I just trade a very short time, like the weeklies, all that stuff. You can see I always have the S&P 500 on top left, the UVXY for the volatility, to gauge the market if we are seeing some sell or buy pressure on this. And then we have the Amazon, Tesla, Apple, Labu, Microsoft, CRM, RH, and all this stuff. If you're new in the market, it's gonna take a while before you get the use of doing all this stuff. If you're new, probably you're gonna be looking at what? I cannot do that because there's so many of it. I just want to tell you and remind you that everything is a process in the market. Say you want to trade Amazon and you're just watching Amazon, it couldn't be. As you can see, I have Amazon here. Next to it is Google, and then I have Apple here, and then I have S&P right here. Every time I trade something, I look at Amazon, but then I have to look at Apple, and I have to look at the S&P 500. Because most of the time, a stock cannot move on its own. It has to be the entire market has to be bullish or bearish so that you're going to have a profitable trading day. So that's one of those days. But sometimes a stock gets a positive coverage from the analyst or positive news, whatever the positive catalyst is, it's going to move on its own. So that's why I have many in here on screen. So now that I explained to you what I have on screen, I'd like to show you what interesting market we have. Let me zoom the S&P 500. Again, I have some feedback on why I keep watching the S&P 500 because the market's direction will depend on S&P 500. If it swoosh down, I'm telling you 95% of the stocks, the single equities will drop along with it. So it's very important before you trade anything, you take a look at the health of the S&P 500 before you do anything else. So here, it's actually on 60 minutes channels in the last 10 days. Again, my technical tools that I'm using for my technical analysis are the basic one. I just use the simple moving average or SMA at 20, the 250, which are these lines right here. And I use for the charting for my candles, I use candlestick right here. It's a lot easier for me to see. We are trading in the last 10 days, as we can see, every time the S&P 500 touches the highs, see what happens right here. Two reds, right? Then recover and then on the highs again for this session. Every time it hits the session high, it keeps drooping back. And same this one, we hit the high for this session, down, this, and then down again. But despite of the price action, if you're going to focus on the pivots though, we are at higher highs for this. But I'm still not sold into that because I don't like this action. And this is not just a one-day action, price action, but rather this is a series of price action that every time it gets high, we get sold off. Like last Friday's session right here, and for today's session, same thing happening. Let's check on the daily time frame for what we have right now. And this is 10 days. Let's zoom to 6 months here. Now that we're into 6 months, it's still the same simple moving average, the 20, the 50, and the 200. This is a very interesting setup right here because here you can box this in. You can box this because multi here 290, 294, 294, 294, and this would be, if you would count it, about 1, 2, 3, 4, fourth attempt right here for the daily on the coincide with the 50-day moving average at 294 and S&P. So far we're getting rejection on that area, fourth time, and if you're going to count this, fifth time. Again, technical analysis can be interpreted both ways. So if focusing on pivot right here, we know that the S&P 500, we have tough resistance at 294 right here at 50-day moving average. However, the lows or support, we are grinding on higher low support right here, 282, 283, and then about 283.80, and here, right here. And for this times, for the recent 50-day moving average rejection, our support is at 289.19, which is pretty much bullish. So very interesting right here for the S&P 500. Now, indicators, let me just add RSI. I like RSI. So probably I would say the way I factor it, pivots would net 70%. And then this simple moving average with about 25%, and this is 5%, the RSI. That's how I would allocate my technical analysis. RSI is short abbreviation for relative strength index. For 70 is usually, they call it 70 is the overbought readings, and below 30 it's oversold, and above 50 it's kind of like it started to lean bullish. Below 50 it's on the neutral. So we can see here, ever since that the S&P 500 touches the record high here at about 302, the RSI keeps here dropping, and we are at neutral level, and every time it try or near 50, it keeps dropping down. So this is interesting. Now let's look at the Dow Jones, the DIA. Again, similar with the S&P 500, right? 50-day moving average resistance, and we have the 20-day moving average support. Looking at the Qs for the NASDAQ, same thing. We are stopping at the 50-day moving average, and this is 48 RSI. So if looking at this, they are all on the same picture. Now, key question is this bullish or bearish? Then you have to look on the Apple. Apple is trading above all the moving average, which is pretty bullish. Then look at the Microsoft. These are the Alphatech, or the heaviest, most valuable company listed in the stock market, ex S&P 500. So wherever this goes, the index follows. So right here we have the Microsoft. We have to look on Amazon, which actually not doing well compared with the Microsoft and Apple right here, because it is teasing to tag the 200-day moving average, which I don't like. However, the RSI is gradually increasing, leaning towards bullish, but then we have the resistance here, the 3 days price action at 1800. So one thing that we need to watch is Amazon at 1800 right here. I would say for the SPY, on my personal opinion, where we're trading, is that I would stay neutral above 289.50. Below 289.50, if S&P 500 loses 289.50, then we're gonna go lower and test the 200-day moving average. Above 289.50, probably it's gonna hover at this area, 294 and 289.50. Again, just follow your pivots and be flexible. When pivots change, then you change your strategy and try not to be so sentimental about it. Your focus is to make money, not to become so loyal on the direction, because that's a lot of pitfall for new traders. I hope you enjoyed my video and learned something from it. Please subscribe and hit the notification bell, and feel free to comment, and I would love to interact with you. Thank you.